Welcome to the deep dive. Today we're looking at a company that is just completely woven into the fabric of global commerce, Visa. For decades, they've been the default. But in the hyper-digital 2020s, they faced a really profound challenge. How does a payments leader built on a physical card network stay essential when money moves instantly, often without a card at all?
Yeah, that's the central question.
So today, we are diving into how Visa answered that challenge by basically reinventing itself using artificial intelligence. Our mission is to unpack their huge strategic shift, moving from being just a transactional network, some called it a dumb pipe, to becoming what they call an intelligent engine, all delivered through a model known as Visa as a Service, or VaaS.
And that transformation it's absolutely critical for understanding the future of finance. VaaS, at its heart, is about unbundling all of Visa's capabilities.
Okay, so what does that mean, unbundling?
Well, think about everything they've built over decades. Sophisticated security, network analytics, identity verification, and offering all those tools as separate modular services that anyone can plug into with an API.
So it's about getting paid for their intelligence, not just for the card swipe.
Exactly. And this is where it gets really interesting, because our deep dive shows how AI wasn't just a defensive tool for them. That same intelligence became the primary driver of their new high-margin revenue.
Specifically through their value-added services.
That's right, VaaS.
So to really get this, we have to go back to around 2020. What was the pressure that forced such a massive company to pivot?
Well, the traditional growth model was slowing down. Card usage in mature markets, the US, Europe, it was plateauing. And at the same time, you had this massive strategic disruption happening everywhere.
The fintech explosion.
The fintech explosion. Buy now, pay later. Digital wallets that completely bypass the card rails. And of course, the rise of open banking.
Which lets people move money directly from account to account.
Precisely. So Visa realized they had to expand their market, and they pivoted hard toward what they called new payment flows.
This isn't just people buying coffee.
No, this is huge untapped sectors. Think B2B corporate payments, government payouts, cross-border remittances. These are massive flows of money that don't traditionally run on cards.
And solving for that meant they couldn't just be a network operator anymore.
They had to become a technology service provider.
Yeah.
And that's where the VaaS architecture comes in. It's really a reimagining of their entire operating system.
Okay, so break that down for us.
The foundation is still VisaNet, their massive resilient network. But layered on top of it are all these intelligence services, tokenization, risk management, data analytics.
And the key, I'm guessing, is the access layer.
That's it. They exposed all these solutions through open APIs. It positions Visa less as a card company and more like a payments as a service platform, almost like a hyperscaler for commerce.
And you can see the strategy really clearly in their acquisitions around that time. They weren't just buying rivals, they were buying specific capabilities.
Yeah, absolutely. They bought Currency Cloud, which gave them cross-border FX APIs.
Tink for European open banking.
Right, and Pismo for cloud-native card issuance. These were all moves to sell services that were adjacent to their core card business.
Which brings us to a really critical point about VaaS that I think we need to underline. They're selling this tech, this intelligence, as a service that clients can use, even if the payment itself doesn't run on VisaNet.
That's the core principle.
But wait a second, isn't that risky? I mean, if you're selling your best-in-class security for transactions that completely bypass your own network, aren't you just helping your competitors?
It sounds like it, right? But that's the strategic gamble and, frankly, the brilliance of it. By becoming network agnostic with certain services, like their fraud scoring, Visa makes its technology indispensable to a bank.
Regardless of whose payment rail is being used.
Exactly.
Yeah.
They figured if they weren't providing that intelligence layer, someone else would. So they chose to become the essential utility for all commerce, not just the commerce on their plastic cards.
Okay, so let's dig into the engine that powered this entire transformation. AI. Its first and maybe most foundational role was fraud detection, the network's shield.
Absolutely. And they were a pioneer here. They deployed the first neural networks for fraud scoring way back in 1993.
Wow. Okay, so this isn't a new thing for them.
Not at all. But the scale today is just breathtaking. By 2019, their system, VaaS, was scoring 100% of transactions. That's 127 billion that year, in about 1 millisecond each.
1 millisecond.
But as digital crime grew, the AI had to get smarter. By 2023, Visa systems blocked over $40 billion in fraudulent transactions.
40. billion in a single year. That's larger than the GDP of a lot of countries.
It is. It just shows you the scale of the war that's being fought. And their AI isn't just using static rules. It evaluates over 500 different risk attributes for every single transaction.
So it's adapting in real time.
It has to. The criminals are using AI now, too. A great example was Cyber Monday in 2023. Visa's AI adapted on the fly and blocked 85% more suspected fraud than the year before, all without slowing down legitimate sales.
But AI wasn't just about defense. It was also about optimization, right? The internal plumbing of the network.
Right. In 2021, they launched the VisaNet Plus AI program, which was all about using intelligence to solve these decades-old operational headaches.
Give us an example.
Okay, a great one is Smarter Settlement Forecast. For a bank's treasury team, managing daily cash flow is critical.
They need to know how much cash to have on hand.
Exactly. Visa's AI now gives them a 7-day prediction of their settlement amounts. For a treasury team, that's huge. It helps them optimize liquidity, saves them money, and reduces risk.
And then there's something called smarter posting, which solves a problem that probably everyone listening has experienced.
The pending charge.
Right. You pay at a restaurant, and the initial charge is different from the final one after you add the tip. It's confusing.
Well, smarter posting uses AI to predict that final amount with 98% accuracy.
98%.
So the bank can just update your balance immediately. It eliminates that friction and confusion.
And what about when a bank system goes down?
That's smarter stand-in processing, or STIP. It's pure resilience.
Yeah.
If your bank is having an outage, Visa's AI uses your spending history to approve or decline the transaction on their behalf.
So fewer declined purchases during an outage.
Far fewer. Commerce literally keeps flowing. The network it fails less often.
So to sum this part up, AI transformed Visa's core processing from a dumb pipe into this incredibly intelligent and nimble engine.
And that was essential for handling the massive surge in digital payments in the 2020s, while also protecting their very high operating margins.
Okay, so now we get to the monetization piece. They didn't just use this intelligence internally, they packaged it up and sold it.
This is the real payoff of VaaS. It's the explosion of their value-added services portfolio, which has grown to nearly 200 different products.
And many of these are just AI services sold via API.
Fundamentally, yes. You see it most clearly in their risk and identity solutions. The whole financial industry is fighting a war against synthetic identity fraud.
Where criminals create fake identities to open new accounts.
Exactly. So in 2020, Visa launched the Advanced Identity Score, an AI tool that predicts that specific risk right at the moment someone applies for an account.
And they kept acquiring talent, too. They bought a company called FeatureSpace in 2024 to get their hands on adaptive behavioral analytics.
And this all feeds back to that network agnostic strategy we talked about. They now offer their core fraud scoring as a service for non-Visa transactions.
So a bank can use Visa's brain to screen an Amex transaction or a direct transfer?
That's it. Visa's security becomes an indispensable utility for the entire industry. They made themselves unfireable.
And this extends to merchants too, right?
Oh, absolutely. Through their subsidiary CyberSource, they offer a tool called Decision Manager. It uses all that network-wide data to score online orders for fraud risk.
And the result for the merchant is?
It's a win-win. Higher approval rates for good customers and lower fraud rates. And they also help automate dispute resolution, which is a huge headache for merchants.
So AI is also getting into the softer side of things, like personalization and loyalty.
Yeah, their consulting arm now uses machine learning to help banks deliver these hyper-personalized offers. The goal is simple. Get people more engaged and, using their Visa card more often.
And they're already looking way down the road.
They are. The Intelligent Commerce Initiative. They're preparing for a world where your AI assistant books your flights or your smart fridge orders groceries.
Transactions initiated by machines.
By AI agents, yes. And they are actively working with OpenAI, Microsoft, and Stripe to build the payment protocols for that world, to make sure Visa's rails are the ones being used.
Okay, let's unpack the bottom line. How did this radical shift actually impact the financials of this massive company?
The results are pretty undeniable. That value-added services revenue, it was growing at over 20% annually during that 2020 to 2025 period.
20% on an already huge base. That's incredible.
And get this. By fiscal year 2024, VaaS was contributing over half of Visa's incremental revenue growth.
Wow.
And when you combine VaaS with those new payment flows, it accounted for more than 30% of the company's total revenue. A major strategic goal achieved.
And these are more stable revenues, I assume, not as tied to consumer spending whims.
So much more stable. Subscription fees, licensing. It diversifies their business model.
Mm.
And all those AI efficiencies we talked about, they helped keep costs down, protecting those incredible 65% operating margins.
So this all creates a massive competitive moat, the stickiness.
It's all about stickiness. First, trust. Their AI kept fraud at historic lows, even as digital crime was exploding globally. That's priceless.
But the real moat is the deep integration.
That's the crucial takeaway. Visa disclosed that its top 265 banking clients use, on average, 22 different Visa value-added services each. 22. So for a big bank to switch away from Visa, it's not just about moving their card business. It's about rebuilding their entire risk, fraud, and treasury systems from scratch.
Which no single bank or fintech can really do, not at the scale that Visa operates.
Not when Visa has invested over $12 billion in tech in 5 years and has decades of AI experience.
So, in short, VaaS, powered by AI, transformed Visa from a vulnerable toll collector into this indispensable strategic partner.
Exactly. It future-proofed them against pretty much any threat you can imagine.
So the Visa story from 2020 to 2025 is just this incredible case study in how a market leader can use AI not just for small gains, but to fundamentally redefine its entire identity.
They shifted from being a card network to being a technology and intelligence leader. And that positions them not just to participate in the future, but to dominate it by becoming the invisible, intelligent infrastructure behind all of it.
So let's leave our listeners with a final thought on that.
The thought is this. Visa is actively building the rails for a world where your transactions are no longer initiated by you, but by your AI assistant.
And that raises some fascinating new questions. Think about how that changes the dynamic between you, your bank, and the network itself when AI is making personalized offers or even spending decisions on your behalf. We'll see you next time on The Deep Dive.
Thank you for listening to today's episode of our Digital Servitization Exchange podcast. We hope the insights sparked new ideas, challenged assumptions, and brought clarity to the evolving world of service and digital-driven business models. This podcast is grounded in extensive research across various fields, drawing on years of academic work, case studies, and cutting-edge publications. It also shaped by hands-on experience of our collaboration partners, whose real-world challenges and successes help us to translate theory into practice. If you enjoyed the episode, consider following the podcast and sharing it with colleagues who are navigating the civilization journey. Your support helps us continuing bridging high-quality research-based and practice-proven perspectives straight to your ears. Thank you for tuning in and see you in the next episode.